Dude, I just realized I realize it. This is crazy because I never thought, me personally, I sucked asset trading like 2 years ago. I don't know what the hell I was doing. But now, after doing this for so long and seeing what works, I mean, dude, it's a crazy feeling. Obviously, you can't get complacent and feel comfortable in these markets, but I'm about to walk you through um, the process that I go through for these core plays. Now, again, the ones that I shared with the public, UAL and Snap, I mean, they both paid very handsomely, and they will likely continue to pay. Most sold today. I firmly believe you can continue to hold for even a potential bigger swing, maybe even this week. But again, it's always good to take profit when you get it. But nonetheless, I mean, I got to be aware that I'm actually learning what works, and I'm going to share my whole process of going through, and I'm going to pick another play to show you and my thought process behind picking it to play, and hopefully it'll help someone out there. Again, that's the whole point. So let's go ahead and look at the play. So the first thing I'll do, obviously, is go to the screener. Now, let me just pause real quick and go to the screener, because the first thing I do, like for example, when I see the screener, yes, it's very nice that Meta and Amazon are on there, but you know that's going to come with some degree of pain and require a little bit more patience to some extent because they have weekly expirations. So what I like to do initially is I like to pick one that is as close to the days since the last earnings report that I can find. So as of this screen here, that puts ZI at the top of my list. Also KAMN I haven't looked at yet. I would recommend going through all of these, but when I get, when I go through these plays and I find one, if it's something really, really good, I'll just stop right there, and I'll go with that one. Form was very nice. It paid off. It's still on here. CDLX, I haven't looked at that as well. That's a technology one. That's probably really lucrative. Let's take a look just to see. Yeah, I mean, it's all the same, right? The MACD, that's just now starting up. Maybe I'm based on the charts I'm seeing from these core plays. I firmly believe that we may see some more downside this week from the broader markets, or maybe even sideways action. But that's not to say you can't exploit this shit. It works. Trust me, it's been working for a year, and if you follow this process, it should work for you too. But the one thing I can't teach you, I can't show you, is how to have patience. That is what I see, and it's the biggest mistake that most people, even in our group, make. And it's a hard thing to get a hold of. Even me, I still make the same mistakes when it comes to patience every now and then. I'm getting better at it, but it's not perfect. That's what practice is for. So once I find a chart, and they're all going to look like this, right? That's core. You get a gap down on earnings, you get the broken RSI, you get the MACD banana. Now it all depends on where some other factors come into play. Like again, the broader markets. This is FOMC week, so it does play a factor into this, but most of the time it won't. So starting tomorrow, and likely through the rest of this cycle, unless or except for CPI day, we should see some pretty smooth sailing for core logic, not any road bumps. But once you find one you like, after you verify the chart, you got all the criteria there, your gap, your earnings, and keep in mind, if you're using the screener in the group, all of this stuff is pre-populated for you, other than you just need to make sure you see a gap with your own eyes. But we're going to go back to LI because that's what this video is about. Just sharing with you how I came to this stock. I like to pick the ones that have just came off of earnings. Oh, and another thing, I'll show you on the chart here in a second. I think you'll find very interesting. So this works because of the repo market and the current situation with the supply side and demand side. When it comes to money market funds, they basically hold all of the supply for most of these tickers we're playing. If you go look, this is easily verifiable with 13F documentation, and it's also easily verifiable with any market screener that works decently well. You're going to pick up abnormal amounts of institutional ownership in the markets, which is caused by, number one, the draw-in of collateral and risk management from all of the filings that occurred in 2021 and into 2022 regarding risk management, the wind down and recovery plans, basically drawing in collateral to segregate it in the repo, financing it while they raise rates and earn free money. That is what it is. But from a market mechanical standpoint, that is the primary cause of why this works. This will likely not be a viable strategy once the repo market is down. And I don't know that for sure, but it's very likely considering this strategy is based on the repo factors and effects on the market in general. So again, you see this chart here, it looks almost identical to the one we just looked at. Gap down on earnings with a MACD starting to make a banana and an RSI that's sitting real low and oversold. Now keep in mind the RSI displayed here is not correct. My mouse was hovering somewhere else on the screen. I can guarantee you this is a definite oversold RSI, so don't pay attention to that number there. So the chart looks good. So from here, what I'm going to do, after I verify that that exists, this gap, and by the way, we're not playing gap fills. That's never been the strategy. We're not thinking it's going to go to 43. We're thinking it's going to test resistance at this marker here, which is 34.45, which again, with options, that little tiny bit of price movement exploitation is very profitable. And if you do that consistently, which is what this strategy provides you, consistent opportunities on a daily basis with the same criteria, the same process, and usually the same outcome. That's beautiful in these markets. So once this is all there, we're going to move over to the options chain. Now this is the options chain. The way I have mine set up, this first column here is going to be your volume, and the second column is going to be your open, I'm sorry, no, the first column is open interest. Second column is volume. So the first thing you want to do is you want to make sure that if you're playing calls, you want more open interest on the put side. Now I know this may be confusing to a lot of you because most people think puts equals shorting, which that is also not the case, but actually puts on open interest equals support in a market environment where all of the supply is held by the big players. They're the ones that own all of the supply. There's really no other way to interpret open interest on the put side other than support. And as far as the call side, there's really no other way to interpret it other than resistance. So keep that in mind. And I may have looked at this wrong because according to what I marked down, this can't be correct because they're off-centered. So we're going to go look at this actually in the real chain. Did I mark that wrong? Oh, I sure did. Okay. Oh, no, I didn't. Oh, no. It was one apart. That's right. It was one apart. Okay, so I'm going to walk you through this. So I messed this up. Let me adjust this real quick. Open interest is the column here on the far of these two right here. I like to have it volume first, open interest second, bid third, mid fourth, IV fifth. And then after that, I don't really look at much of anything. So we're going to adjust this real quick. That's funny that I don't get baked, kids. It's not good. Don't get baked unless you know what you're doing. So what you're doing when you're going and you're looking at open interest is simply this. Compare the call side open interest against the put side open interest and make a ladder, walk down the options chain, because remember, if you're walking down, that means you're going up in price, and if you're going up, you're going down in price, which is also a little confusing, I get it. But it's just how it works. You're going to have to get used to it. And you just keep going, right? And until you find that resistance. And theoretically, here is one open interest difference. So we're going to stop there. So theoretically, this, I was thinking when I first started making this video, I was getting prepared to tell you that the 35 was likely the ceiling because of where the OI was at, but I was reading it wrong. So this is actually where it's looking. And the reason why is because, again, we compare 6 against 2688. And let me just go through this again. I'll show you now that it's fixed. You're comparing it against each other, calls versus puts. So again, here we have more puts than calls by a lot. So you have more support. Well, look at where the price is at. It's at 30. Now, here in the money, you also have more support as well. But keep in mind, you do have some blank spaces here, so that may be something to watch tomorrow and Friday, which is what I plan on doing. I'll likely, again, enter this on Friday evening. But we lost 30% today from the stock. There's more support here, And this, again, remember, these are monthlies. This one expires on the 18th of November, so there's no rush here. Theta doesn't really eat at your gains or your contracts if you're in the money until about 8 days away from expiration. So again, more OI on the put side than the call side equals support. And then you just walk up the chain with it. Here, same thing. At the 40 that I skipped over, same thing. 86.48 versus 183, same thing. But here at the 45, 2667 versus 2676, pretty damn close. There is 10 more resistance, basically, than support. So we're going to go ahead and stop here. And that's basically all you need to confirm this play. That, and the hardest part of all this, is patience. Now, why we don't buy out of the money here, because again, this is not like the S&P components, because I doubt this one is a S&P component. Could be, but very, very lightly weighted. Is the IVs more lucrative? Here, you can probably even play this one out of the money at $35. Not financial advice, but I'll likely play a vertical spread here, 30 and 35 for the 18th, and I'll drop my out of the money if it goes against me, next Monday. But again, there's multiple ways you can approach core. The safest being in the money, take it slow. If you get pushed out, that's your exit signal for calls, and take profit. That's literally all you got to do, and you can do it over and over and over again until the repo demand comes down. So again, this is what I had marked originally. This is what I thought, because again, I'm retarded, but I thought I was reading it wrong, and it should have been here and here, and yeah, it's not even comparable. Way more support on the 40. So that's what happens when you're retarded. But check out this shit. We're going to add something a little new, because remember, I don't just make a strategy and I'm not just sitting here sticking with it. You got to understand, every day I'm here looking at the shit, trying to figure this shit out, trying to increase my productivity, my effectiveness, my knowledge, my awareness. I'm trying to improve on a day-to-day basis. So, if you see some shit that you didn't see last week, it's because I'm continuously learning shit. That's my goal, and I feel like it should be everyone else's goal too. So we're going to look at the options chart itself. Now, this is the daily. Just stay with me here. This is the daily options chart for the $30 in the money call for November 18th, the core call, the basic, just black and white core play for this 18th of November. This is the daily. Now keep in mind, again, this is not the chart. This is the options chart. Very different from a psychological standpoint. Looks the same, but from psychology, it is much different. So let's zoom in on this. And first of all, the price of this fell 85.38% today. Now the price of the stock fell 30%. This fell 85.38%, but it's not like it's expiring on Friday. This is expiring on the 18th, meaning you can pick this up at a very nice discount and even be patient, wait tomorrow, see what happens, and you could even get in on an even better discount, which would make it even more lucrative. Now when it comes to the technical indicators, as far as the psychology that we use for the standard core chart, you don't really get much here. Yeah, there's still a gap. You see somewhat of a banana, looks pretty familiar, but it doesn't tell us much on the daily. And these contracts were written on 10/21, so they're fairly new. So keep that in mind as well. But let's zoom out to the 1 hour. When you scale down in the time frame on these contracts of these core plays, you're going to find that you will start to see the same psychology that you initially picked the play with. Now, again, we have gaps here. We knew earnings was, very, I think it was yesterday actually. We had earnings, we have the gap, we have a very nice banana forming here, starting to curl down, but there's still a problem. There's not an RSI yet. For this to be a perfect core logical, method to approach this, we would want an RSI to be there. So we're going to go one more time frame lower to the 30-minute to see if we can gauge anything at all. And when we do this, you're going to see that, holy shit, the RSI is at 15, the banana is even more pronounced, we have our gap set up here, and again, very, very, very likely that you will profit on this if you go with a patient approach in the money. And if you get pushed out, it doesn't mean I'm a shill and core doesn't work. It means it's one of those plays. But again, you don't ever know. But luckily, or knowing my luck, Most of the plays that I put out for the public, except for Snap, Snap was just fucking, here you go, here's free money. But most of the other ones take some time. I think because most of them have been puts. Usually the call ones are pretty good. But with calls, you've got to be careful. If they do push you out of the money, you got to get out. So again, be patient. But this is consistent shit. It should jack your titties a little bit, because hopefully you see what I've been seeing this whole time. And I'm going to keep trying to improve on it. But yeah, I mean, dude, I'm going to start honing in and focusing on this shit, because, you know, if I can trade and get the capital we need to scale this place, then we don't even need to fucking worry about getting new members. We can just keep the ones we have. So it's great. But yeah, hopefully this helps somebody. Because again, look at the options chart, and then look at the normal chart. It's I mean, this shit's insane. And it's not anything other than the technology that's available to us. It's amazing. So let's make some fucking money on this shit.